welcome to this special coverage we are calling the Buffett Trail. The most awaited event of the year for financial market investors across the world is just around the corner. Yes, we are talking about one of its kind, Berkshire Hathaway Annual Shareholder Meeting 2017. A meeting that brings two of the world's most influential and revered investors, Mr. Warren Buffett and Mr. Charlie Munger, face to face with the shareholders of Berkshire Hathaway, who come from all across the world to participate and enjoy in what is touted as the most fun-filled shareholder carnival over the weekend of 6th and 7th May this year. One such shareholder who never ever skips the chance of seeing the fun and action live is none other than Mr. Raamdeo Agrawal. He each year with the Motilal Oswal asset management team to mark his respect for the man he looks up to with all his heart and soul, and who has been his biggest influence in the world of value investing. That is, of course, Mr. Warren Buffett. And so Nikunj and I thought it best to get the key team of Motilal Oswal Asset Management join us in our studios today to talk about their journey to Omaha and what are they expecting from this year's investor Q&A. Joining us right now are Mr. Raamdeo Agrawal, who is, of course, the Managing Director and co-founder of Motilal Oswal Financial Services. We also have Aashish Somaiyaa, who's MD and CEO of Motilal Oswal Asset Management. And we have Mr. Gautam Roy, Fund Manager of Motilal Oswal Asset Management Company as well. Welcome, gentlemen. Thanks so much for being here in the studios. Mr. Agrawal, all geared up this time for the 53rd AGM?
Yes, I mean, as usual, you know, we have booked our tickets, we have booked our hotels, because you have to do that quite in advance, because I believe flying into Omaha on that day is becoming quite pricey. So you have to land somewhere around Omaha and go there, because crowd is like 40,000 and all. So again, we are expecting it to be a nice fun, and we'll get to meet a lot of interesting people, and of course get the Q&A.
So the fact that in your first answer you mentioned that going to attend this AGM could be pricey, you're not talking like a true value investor. Book your tickets in advance, get your hotel bookings done.
Yeah, so the price has gone up, but the value still remains way above that. So you know, still the values. I mean, if you go there, if you learn one thing in his 5-6 hours of discourse or Q&A, I think that's good enough, because now the learning is going to be incremental. A lot of questions are already answered by him, and you know exactly if the question comes what he's going to say. What you're looking for, a completely new question depending on the situation, and what he has to say. Like right now, I'm on top of the mind. One of the questions which is I'm struggling in my mind is that what is his thoughts about the active investing and passive investing, because right now the entire developed world is in turmoil about this entire thing. India is having a gala time with the active investors, but Europe, so Europe and America are really going through this entire tectonic shift from the active to passive, and it is not running with few $1 billion, it is almost $1 trillion kind of situation, and they are saying that by 2022 or 25 it will become 50% passive and 50% active. There is a lot of layoff. You know, here you don't get a good manager, there you are getting in dozens. So I mean, it's I mean, this discussion where exactly is headed, this entire investment management industry, it is the biggest game in town, 70-80 trillion dollars, which is going to become 150 trillion dollars. How exactly will be managed? Who are going to be the winners? What will be the rules of the game? How the compensation to the managers will happen? So a lot of these things will be discussed in detail. And then, I mean, there are a lot of issues related to technology. Now they are getting into Apple and all. So what do you think about the entire this new gen technology, how internet is going to be changing our life, more particularly the investing. You have Amazon, which is all over now. So all the discussions we are looking forward to.
And active versus passive will be very important from an India standpoint, not just because what's happening domestically, Mr. Agrawal, but also, you know, a lot of the money which was coming into India through allocation, you know, in benchmarking against the MSCI index is now going to be, you know, coming through passive investment. We know how the kind of volatility ETF money has created in the market.
Yeah, so but we still know that active does very well in India. So our game is how do you play those guys who are coming with a passive mandate and bring billions of dollars here. So I mean, some insights on, you know, I mean, we are going to do active, we are going to follow our stocks, but the issue is that what will be the impact of disproportionate global allocation to passive on the active stocks, you know, because ultimately they are going to buy stocks. So how exactly how should I, it's a biggest challenge for me. So how do I how do I overcome that particular challenge, as an active manager. So some thoughts will definitely come there.
Gautam, it will be your first time there.
Yeah.
The entire AGM now can be seen on the net. Why are you going all the way?
I think, as a practitioner of investing, it's like almost like, going to Mecca now, or to a pilgrimage. Now you can always say that God is everywhere. Why do you need to go to a pilgrimage? It's like, having the feel of the place, hearing the man speak live, and it's a first in a lifetime opportunity for me. So definitely something that I have always looked forward to, and finally I'll be able to do it. So, it's one thing to not just hear the man himself, but Raamdeo ji is going. Just like that, I think thousands of great investors from the world are going to, come there. And it will be an exchange of ideas. There is this yellow Berkshire night before the evening before. So where there would be a serious amount of exchange of ideas. Already I am speaking to fund managers in the US, exchanging ideas and, looking forward to meet them. So it's not just hearing the speech. It's the entire experience around Berkshire, which is very important. And I think another thing, you always have questions about the US, right, as an investor, because most of the things we have learned about investing, let's face it, have been learned from the great practitioners in the US. And now that country is talking about passive investing as being superior to active. That's a big conundrum in my mind. I sincerely don't believe that passive investing per se is superior to active. And, I want to challenge that thought. And I'm going with a very open mind, and probably also to explore whether we can come up with ideas in the US, because as you know, my fund Focus 35 can invest in the US too. So that's another perspective. The perspective is multidimensional. There are multiple ideas that you are going there with. So, and the experience of US, and we know that now the US is coming out of a recessionary situation, growth is coming back. So it could be a very interesting market to look back for active investors, especially when you are seeing that, for the past few years, the greats of investing in the US have not done well. Probably it's a time for a bounce back. So I'm going with an open mind, and I will explore as much as I can.
Apart from selfies, which I'm sure a lot of you would be taking there, what is in store for the CEO and for the other team members who would be accompanying you?
So one of the key things about our industry and what I've learned in the last many years is that there's a lot of focus on product and performance. And my whole learning is that performance is an outcome. If you buy the outcome, you're not assured of the sustainability. So last 4 years we worked very hard to talk to the market, that look at the process, because consistency and quality of input, it is what results in output. So we worked very hard to educate people on our process and philosophy. And I am taking actually some of our partners along so that they can understand why our investing style or philosophy is influenced by Charlie Munger and Warren Buffett. So from my perspective, it's very important that people see where the thought process comes from. They hear a lot from Gautam, they hear a lot from our chairman, Mr. Agrawal, but I would like people to do a more educative kind of trip along with us and see where we learn from. Go back to the source itself. So I think it will be a differentiated experience for a lot of my partners to see that place.
Right. Mr. Agrawal, I was discussing with Nikunj a little while back. With each AGM, the world also changes a bit, and the last 12 months, the world has changed a lot, and it keeps changing because now, aside of talking about the micro environment, the macro environment, there's a geopolitical environment also, which is rapidly, changing color. We just had, the announcement of snap polls in the United Kingdom in June. Do you think that he generally stays clear from talking politics? Do you think that this time around he perhaps might be pushed to give comments on that, because that could be a bit of an uncertainty?
He's always pushed around for having a serious view on politics and all this macro stuff. So last year it was on the eve of this Trump election, and clearly he had very strong views against Trump and
that's true.
for Hillary and all. Yet they kept, they're really restrained. They were pushed to speak on that, and they avoided, and so clearly he has very strong political views, but I don't think in this AGMs and all he messes around with that, because it can be quite messy. The whole world is watching. So he generally avoids, and he doesn't guide the investors to give too much of weight to the entire macro stuff. And I've seen, even in 2007, I was there before the collapse, and he was not that bearish.
Oh, really?
People asked him, I mean, you can go and check the notes of 2007, and there he was asked, what do you think about this? Because mortgage problem really started surfacing. So he was asked, what do you think of this? He said, the economy is growing very rapidly, and the new houses required are very high, and somehow this thing will be taken care of. And the ultimate collapse for US was 6 months ahead. So even with his knowledge, his connectivity, he's not too great on macro. I mean, his real insights are on the investing and looking at the company, looking at managements, human behavior, investor behavior, market philosophies, I mean, those kind of things. Like right now, the way this $500 billion kind of companies they're buying.
Yeah.
I mean, how do you graduate from buying to less than $1 billion company to buy a $700 billion company and put a serious amount of money? Because when he buys, he sends $5-10 billion like a change, I mean, he doesn't talk anything less than $1 billion. So when he's buying any meaningful, I mean, in a $300 billion balance sheet, you buy even 5%, you buy 15, 20, 30 billion, and he's not a 20 stock portfolio guy. His incremental allocation is sitting on $100 billion of cash in hand. That was last quarter. Maybe it has become now 110.
80 plus companies.
But his cash in hand is very large. So again, another interesting thing will be what exactly he plans to do with this $100 billion cash hoards. He says his guns are loaded. He's looking for elephants, So those kind of things he talks about.
He was questioned about the negative interest rate regime. He made a comment on that. The negative interest rate regime thankfully is behind us. But I'm sure in this AGM, big questions would be centered around why has he bought airline stocks? Why is he going out of its core competence? He's always maintained that, look, technology is not my core competence. Bill Gates is my very dear friend, but I've only bought 100 shares of Microsoft. He's bought IBM, which I've been told is his second largest holding now. So is this entire Buffett approach of investing changing? Because he's selling Walmart because he's worried about Amazon. That's what I've been told.
So I think there will be intense questioning on airlines thing also. It's very exciting in India. We had our own version of now all the stocks are listed here. It's one of the fastest growing markets in airlines. But I mean, even best of the world, I mean, with Indigo and all, one has not made serious amount of money after the listing. So what's his thoughts? Why he's so? I mean, he's bought all the 4 airlines. One is bought by his assistants, and 3 are bought by him. So actually, he has now. But I saw one of the interviews where he was being asked this, but he didn't give a very good answer there. Since it's still there is some more to expect in some more fireworks to come here, because people keep asking till he gives the answer to the satisfaction. People will keep asking that. So I think we expect some humor and some kind of and that it requires a lot of courage also to speak what he has spoken about airlines, kill. I mean, what is that? You should have shot that guy dead because it has done biggest damage to the capitalism and things like that. So he is the harshest possible word. And next day morning you see he has bought 4 airlines in his, so I think there will be interesting discussion on that also.
I have a follow-up question for you. You think Buffett is the best investor in the world?
Well, going by the track record, that seems to be true.
Right.
So one thing about investing is that the length of the track record, because many people obviously have better spurts, a 3-year spurt, a 5-year spurt. But many people also get killed, right? We know the biggest of the names had a huge mistake and went out of business. So staying in business for the longest time and without having that kind of markdown, that is the hallmark of the guy.
So if Buffett is the best investor in the world and whatever he has invested in, his success rate is great. You bought Berkshire Hathaway stock. You adore and admire Buffett's style of investing. Yet in an individual capacity, in a fund capacity, you sold Berkshire Hathaway. Isn't there a conundrum there?
No, see, my portfolio target is to make 25% for my customers. See, I can personally be emotionally connected. I may worship him or whatever, I may be bhakt but the portfolio objective cannot be compromised with that. This serious money, somebody is interested in trust that Raamdeo go and buy right things which can, so that you can give me a fair return. So we did buy 5% of my fund. We bought initially, so amount was small. But still, it was $10-15 million. Yeah, something like that.
Even the fund started.
That time itself, we put 5% day one as this thing. Then when I went to this thing, I spent full 1 day researching Berkshire Hathaway as an investment. I mean, then I changed my role and I actually did the research. I went and met a guy who is one of the largest holder of this, I mean, must be having $3-4 billion worth of only Berkshire Hathaway. And his job is only to take care of Berkshire Hathaway 24/7. Saturday, Sunday, you will get appointment to talk to him. So I went and met with him with the help of a friend, and then we discussed and we figured out that best possible growth rates cannot be more than 8-10% if you're lucky. Then I said the gap is too much for me, so I must not put my money, and then we do that.
So that was really an investment decision.
It was a purely investment decision. Yeah.
If you two were given a chance, I don't know, Raamdeo ji, if you've had a chance to ask a question to Mr. Buffett or Mr. Munger, but if both of you were given a chance and you got lucky with asking a question, what would that be?
So this time he has written on share repurchase, and you are seeing IT stocks which are whatever they are doing, they are not going up at least, but the share purchase seems to be the main thing there. And he has said one point that I would like managers of companies to approach the share purchase of their own company in the same way that they will approach the share purchase of another company, let's say merger or a takeover. So dispassionately give with the target price in mind. I think that's a brilliant point, and that's come up anew. It's a fresh point. So I would ask him to talk a little bit more on that, because every share purchase is not a good thing for minority investors, especially in companies which are definitely going to degrow from here. What if you could have, the company could have bought more shares with the same amount of money when the price comes down? So I think that's a very important perspective for a minority investor, and I'd like to hear more about that.
So I think a couple of areas actually, because since he sits on hordes of cash, and then there is pretty much zero interest rates, and he himself complains about the fact that there are not investment opportunities. On the other hand, he writes a lot about that he's blessed to be born in America and stuff. And the point is, if you have $100 billion of cash and yet you say you're blessed to be born in America, why don't you start investing outside? So that is one area. But why doesn't he invest outside, and where would he like to invest if he invests outside the US? And the second point is also about whenever he speaks about active and passive, what I read into his statements is that he's saying that if you are not Warren Buffett, you better go for passive. I think that's more the statement. So I don't think he's marketing passive. I would definitely like to ask him for a clarification on that.
The other thing, Nikhil, that struck me was that he's always advocated buy and hold forever. Mostly. Seldom does he take sell calls. Do you think that applies really well to an emerging market, high growth market like India, Mr. Agrawal? Because, there are new businesses coming every now and then. Every 10 years, the knowledge base gets upgraded. He himself is realizing that in the last 10 years, maybe 2005 onwards, there have been new opportunities and new investment ideas that have come through. So does the buy and hold forever seem realistic in today's market environment?
Yeah, very, very important point. Here also the discussion will come, because he is changing his operating manual. So what he is saying is that the investment portfolios are of two types. One is marketable securities, I mean the securities which are available for selling, and ones which is for actually forever. What the businesses is bought forever, like say a Geico and those kind of things. So they are the operating businesses which are not listed. But then there are listed stocks like your Washington Post, American Express, Coca-Cola, Walmart, or now Apple, and so they are all sellable. So he is saying there is a mistaken belief. He has written that. There is a mistaken belief that none of any of these marketable securities are for actually selling. I mean they are not available. I mean they are being held forever. So he is correcting that mistake, and he is saying that it is available for selling. I mean he may say, of course he is not going to hold it for 1 year, 2 years, 3 years, but clearly on your lines only he is saying that he is also feeling, because he is underperforming big time. For last 10 years he has underperformed the benchmark reasonably by good margin. So unless he corrects some of the stocks which are like Walmart, I mean see the technology is hurting a lot of franchises. Walmart is ultimate franchise. But today Walmart is being hit by Amazon and all these resellers from the internet. So clearly he has taken that view of this forever investing has been, particularly if you are buying marketable securities at full price, he is having a rethinking on that.
If you look at the Buffett portfolio, 70s, 80s, 90s, during the TMT boom and the bust, he underperformed, but then he recovered. But if I look at the current stack of the top 5 or 6 companies in terms of market cap, he's not identified even one. He never identified Google. He never invested in Microsoft. Apple, he jumped in when Apple has become one of the most valuable companies in the world. The companies where he's invested in, there are other challenges which have come in. That, for example, Wells Fargo, Coca-Cola, on the entire sugar issue. Is he losing his edge?
Well, that's a very important point, Nikunj, because see what has happened is where is growth coming in the world from? It's coming largely from tech in California, and this classically has been the region where he has never focused on. So, you know, if you're not focusing on the area which has become the largest in the world, largest value creator, wealth creator in the world, naturally you are not going to be able to participate in that. And somewhere his buying of Apple, although belated, somewhere it's also an acknowledgement that yes, this is an area which is there to stay and we have missed out on it. And remember in 2000 everybody was, all the great investors were saying that tech is you know, it's a peak and it will come down. That has happened, but tech as a business has only evolved. It has leapfrogged from there. Tech has become much more mainstay today. In fact, and we can also see that he's selling off Walmart because of tech, nothing else. So the importance of tech is being recognized by him for sure. And it's always been there. But to answer your question, you know, the pond from where the biggest fish came, he was not fishing there. So
no, but one correction there. For last 15-20 years, he is not buying minority stakes in the companies.
Yes,
he is buying more 100% stakes like Burlington or whatever he bought. He bought bulk of the things in on a 100% basis. So now his fund has become so big. He is not going after this $5 billion of minority acquisition here. There are some, you know, that 2007-8 is slightly different, but otherwise he is not buying majorly in his balance sheet minority stakes. The one which you have, he's buying 100% larger businesses.
Mr. Agrawal, we need to do a final round. Do you think India will figure in the Q&A, the 6-hour-long Q&A about his strategies with emerging markets? He's of course tested waters in China, but somehow India has not been, you know, top of the mind strategy.
The 100 Indians going, we know how to find out.
Exactly.
Yeah, unfortunately, it never came up that strongly. The India is not being discussed. But we should be asking those questions. You know, somebody should be from India or people like us. We should be putting those questions. Whatever we want to hear, anything about India which we want to hear from him. I mean, he came 2-3 years back, 4 years back here.
Yeah,
so he's clearly interested. Mr. Ajit Jain is there, very close to him. So
he didn't come back again. He came in 2011.
Yeah, but he should have investable opportunities here, no? Like insurance is one thing where they wanted to, but nobody is willing to give him 51%. They said whatever effort we put, we must get 51% of that. So the government is not willing to give 51% bill. You know, so one project where they could have started big from the base, that is not, and now he's not buying any minority stakes. I mean, how much can you buy in India? $5 billion will make waves here. So, and for him it is nothing. So,
you know, the challenge of size, when the MC business started, it was about 1,000 crore. It's about 12,000 crore now.
20,000.
20,000 crore. See, I lost the track of numbers as well. Ashish, congratulations on a job well done, and this is just the beginning. So I'm sure earlier Gautam and his team, they were only buying 5,000 shares of iShare. Now the limited token size must have gone higher. So that answers you, you know, it's the problem of prosperity, I guess.
That's a happy problem.
No, but are you guys going to be expecting, you know, any words of wisdom on how to approach emerging market investing? Anything unconventional that you think he would kind of speak about this time around? Because the context of that question is the developed world has a series of problems that they need to address. It's now time for emerging markets in India, perhaps.
In this 6 hours, you don't know from where the insights will come, I'm telling you. And many times I have seen questions one and he speaks whatever feels like talking. So, you know, I mean, and the insights can be very different for everybody else. But insights are insights, it's timeless. And it can be about emerging markets, it can be about investing, it can be about interest rates, it can be about anything. So I don't categorize that from where to get the insights. Just we should be able to hear it properly 100% out there.
You know, I can share my experience. I've never been to the AGM, but I saw the last AGM on internet, courtesy Yahoo. And what I learned from the AGM was how to live happily. He actually talked about how should you remain happy. And you know, like my good friend Monish Babra always tells me, that Buffett is not just an investor. He also tells you the way to live life. Full of energy, always excited, drinks his cherry coke, eats his hamburger, and is still fit and healthy.
Right. So I think the mood point right now is 6th May is when viewers need to tune in to the AGM. All of you will be there catching the action live, and we all will be catching the action back home through Yahoo Finance, of course. But it's going to be an event to watch out for, and you just don't know what will come out of Mr. Buffett's mouth in terms of explaining his market and life philosophy. Sums it up?
Yes, please.
Thank you very much, all of you, for taking the time out and being here for this special edition. With that, we come to the end of this edition of the Buffett Trail. But our coverage will continue, and Nikunj and I will be tracking all the action for you. So stay tuned to ET Now for just that.